Fannie Mae and Freddie Mac could need a taxpayer bailout of as much as $100 billion if a severe economic downturn grips the United States. The Federal Housing Finance Administration released the results of a stress test that examined how the mortgage finance companies would perform in what's called a severely adverse scenario. The stress test was mandated by the Post-Financial Crisis Dodd-Frank Act, and the specifics of the scenario were devised by the Federal Reserve. $100 billion bailout if we get hit with another severe economic downturn. What else could happen? Let's check in a moment with Craig Smith, author of Money, Morality, and the Machine, next. Craig Smith back with us here. Several of his books include Money, Morality, and the Machine, as I mentioned. Also, Don't Bank on It, The Great Withdrawal as well. He's a familiar face and voice of truth and reason. He uses his very sensible analysis of geopolitical and economic trends to inform everybody he can. He's an entrepreneur, monetary expert, author, as well as an expert in many forms of tangible assets. Here he is back on Coast to Coast. And do we have things to talk with you about today, Mr. Smith?
Oh, George, it's great to be back with you, and what a gracious introduction. It's been too long since I've spoken to you, so it's good to be back.
$100 billion bailout for Fannie Mae and Freddie Mac if things go down? How are we going to pull that off?
You know, it was amazing when you read that. I had seen that just a couple hours ago, and this is like, to quote Yogi Berra, deja vu all over again, isn't it, George?
Are they warning us about something?
Well, it sure appears that way because, I mean, this is what started the whole collapse in 2006 through 2008 when we had the mortgage crisis. You know, it was Fannie and Freddie signaling that people were in over their heads. And I'm sure you saw it as well because I know you do your homework. Right behind that article on MarketWatch was that Americans now have the highest credit card debt in the history of our nation. And so here, you know, you would think we would have learned to live within our means, but then again, you can't expect the people to do it when the government sure as heck doesn't do it. So, yeah, these are warning signs that are on the horizon, George. And as I've always said, look, America's a great country. Never bet against America. We have been through crisis after crisis, and we always seem to bounce back. But it doesn't mean that people don't get hurt in the process, and that's why I'm delighted to be with you tonight to talk about how to make sure people don't get hurt during the crises.
I was at a restaurant with producer Tom tonight, and as we were checking out, another guy who was sitting close by us was checking out, gave the bartender a credit card, and it didn't work. It was declined. I assume he's maxed out. I was going to pay for it for him, but he had enough cash. But you're right. Credit card debt is out of control right now.
Yeah, it certainly is. And what's amazing is that, you know, years ago, I remember, George, a time when you couldn't use your credit card for groceries. I would imagine you remember that time.
I do.
Well. And now people are putting their, and of course a lot of people will say, well, I'm doing it to gain the points so I can get free miles on airlines and so on and so forth. And that's all good and well if you pay your credit card off every month, which I do, and I'm sure you do as well.
Yeah, get close.
However, more often than not, most people don't, and they're hit with incredibly excessive charges, and that's why the banks have made so much money recently. I mean, think about it, George. You know, the banks needed billions of dollars of bailouts, and yet they made all that money back in a matter of 2 or 3 years and paid the government back, and everything is all well. Well, I'm not sure that that's the case, and I think that there's a lot of signs that are on the horizon that we need to look at. You know, as I sent to you and Tom, there are cycles that have been repeating themselves over 1,000-year periods, 100-year periods, 10-year periods, and we have a convergence that is going to hit us. That's an 80 to 100-year cycle that gave us the Civil War, that gave us the Revolutionary War, that gave us the Second World War, and there's multiple cycles that are converging all at once. Matter of fact, in 2008, just merely 3 of these cycles caused what was almost the meltdown of the entire system, and now we're having many more than that, all converging at once. So, can I predict the future? Of course not, George. But I do know that we are set up for something getting ready to happen. I can't put my finger on what it is.
You can feel it, though, can't you?
And, George, I think it's palpable. I think people throughout the whole nation feel it. Yes, things are good.
I think that's why people are uptight right now, Craig. I mean, they just, whether it's North Korea or some kind of economic mess, I just think people are sensing some kind of calamity of some kind.
No, you're absolutely right. Matter of fact, this morning I was on Fox Business Network with Connell McShane talking about the North Korea issue, which I agree with your guest, John. Our backs are up against the wall right now. We have no choice but a military option.
Yeah, the guy's not giving us a way out. He's got us painted against the wall, and you don't do that to a tiger.
No, especially with a guy like Donald. You're exactly right. Like Donald Trump, you just don't do that. And of course, our real way out of the mess in North Korea is via China. But China has appeared to give us no help at all. And when they have told us they will give us help, they have kind of meandered around it or figured ways around it, just like people got around selling oil, buying oil from Saddam Hussein and from Iran. And so I think it's going to create a crisis. But let me tell you, the chance of Kim Jong-il hitting the United States, and of course, I have a home in Kauai, so I'm the first line of defense, so to speak, George. Matter of fact, I'm leaving for there in the morning. I don't worry about that at all. Even though all the Hawaiian Islands are on alert right now, the chance of him getting a missile off the pad and reaching the United States, I think, is slim to none, and there's no indication that he can put a nuclear warhead on one. So I wouldn't be too concerned right now, but no doubt, with the tiger in the White House, he is going to take first strike options. He is not going to wait to be attacked. He is going to attack. And Trump is the type of guy that will do it, George.
Black swan, what exactly is that?
Well, that's a great question. By definition, a black swan event is basically an event that is extremely difficult to predict or to anticipate. It's a random, unexpected event. It's an event that deviates beyond whatever is expected to happen. So a black swan event would be like what happened in 1929 in October. We were riding high. Everybody remembers the roaring 20s, big cars and mink coats and big cigars and the speakeasies and, Hollywood and Broadway, and everything was going great. And then all of a sudden October 29th came, and next thing you know, the stock market collapsed and we ended up in the Great Depression. That's a black swan event. And we are so overdue, George, for a black swan event that it's frightening. If you look historically, about every 10 years something happens. And if you go back to just 2008,
and it always seems to be around October, doesn't it?
Yeah.
Weird.
Look, I hate to make predictions. You know that I've been with you so many times.
I know.
People have tried to pin me down about the price of this or
including me.
And I hate to make predictions, but I got to tell you something. The VIX, which is called the volatility index that is on Wall Street, if you look at the pattern on the chart, George, the VIX is exactly identical to what it looked like prior to October of 2008. And so if I was to say that there is going to be a crisis that hits, it would be this October. I don't think it's going to be the end of the world, George, but, because the end of the world only happens one time. But I got to tell you, I think it's going to be a time where people better be ready to hunker down. And the good news is, if you ever read the book Tribe by Sebastian Junger, he will tell you that it's during times of difficulty that people pull together. We become more cohesive.
Hold on for a second, Craig. We'll pick that up when we come right back. Craig, the stock market at an all-time high, it just seems to be getting stronger and stronger. What is going on there?
Yeah, I broke another record today, George. It's in nosebleed territory. I mean, this is a rarefied air that is breathing at this particular stage of the game. I don't know what to make of it, to be quite honest with you, George, because there's a lot of changes that have happened in the stock market. You and I talked about it last time we were together. One is, of course, the computerized trading. More than a third of the market now is run by algorithms and not human beings. You also have the emergence of exchange-traded funds, or more commonly referred to as passive investing, where people just put their money in these funds and hope for the best. And then you actually have an actively traded market. No doubt that corporate profits are up. I mean, this last reporting season, corporate profits are up 10%. A lot of these companies are at all-time highs like Caterpillar and others. So we can't take away from the fact that there is underlying growth. However, on a long-term basis, to sustain a stock market at 22,000, you need to have an economy growing stronger than 2.5 or 3%. You're going to need a 3.5 to 4% growth pattern. And even though we turned in a great quarter at 2.5% this last quarter, George, which is double what it was, the first quarter, there's just not enough underlying growth on a worldwide basis to sustain these numbers. So I suspect we're going to see a correction. I don't think we're going to see a crash, and hold on to your seat. To see the stock market come off 5,000 points would not fundamentally really hurt the market on a long-term basis. I think we'd let some of the air out of the balloon, because clearly there is a lot of air in this balloon, and every balloon looks for a pin sooner or later.
And even if it dropped 20%, it's still pretty high.
Yeah, I mean, we'd be well above the high that we started before we had the big drop in 2008. Stock market was at 14,600, a 20% before the drop in 2008. So a 20% drop from here would put us at about 17,000, just rounding numbers off. So it wouldn't be the end of the world, but I'm more concerned with some of the other issues that we have. See, George, we have a high stock market now because we have financially manipulated it. There's been monetary policy that's been run by the Fed and other central bankers that have caused this to happen. Now, the central banks merely bought us time to get our fiscal house in order. And you and I have talked about this. How do we deal with that $20 trillion worth of debt? How do we deal with $125 trillion worth of long-term obligations that we have in the form of Social Security, Medicare, Medicaid, welfare, those type of things? Until we get those fiscal issues under control, you can only do so much monetarily with Fed policy. And quite frankly, I think the Fed has overplayed their hand at this point, George. And that's why if you look at, I put together what was called a crisis timeline. I looked at every decade.
Nice job with that, too, by the way.
Thank you. And every decade, something happened. And, George, let's just say 2008, 2009 was when we had the worst part of the damage of the crisis of the mortgage meltdown. Something's going to happen in 2018 or 2019 at the very latest, and I happen to believe it's coming a bit sooner than that. Now, again, it's not going to be the end of the world, because Trump, like him or hate him, and I happen to have voted for the guy, he's doing a pretty darn good job, George. I mean, there's 1 million less people on food stamps. CNN admits that he's created 1.2 million jobs. A lot of them are better paying jobs. I mean, he's got a good Supreme Court person that he put on the court. I mean, this poor guy doesn't get any credit. I mean, what's the old saying, George? If he walked across the Hudson River tomorrow, they'd say the poor guy doesn't know how to swim for So,
or there was a boat underneath him propping him up or something.
And see, I'm like you, George. I was very critical of Barack Obama, but I didn't want him to fail because I didn't want the country to fail.
Exactly. I do not want this president to fail. I do not want any elected president to fail because it affects all of us.
Absolutely. And look, we, the people, elected this man to do a job. And I'm firmly convinced, George, that if people would allow him to do his job, and when I say the people, I'm talking about people within his own party, people in the Democratic Party, the media, would just give this guy a little bit of a break and a little bit of credit for some of the things that he has done, I think we could see 4 years of great prosperity for the United States of America.
He's just got to stop tweeting. He's got to stop doing this. I mean, he got into an argument with a Democratic senator today. Just text a tirade. I mean, He's just got to stop. I mean, we've got issues with North Korea. We don't have time for a president to be on his smartphone tweeting people.
No, and you're right, George. If you think about 1959, 1960 during the Eisenhower recession, which most people forget was a very severe recession. Can you imagine if Dwight D. Eisenhower had the ability or the character like Donald Trump to tweet? He'd probably put us into a Great Depression. But there are some things that are happening that I think are going to be beyond his control. And in my crisis timeline report, I quote a gentleman by the name of William Thompson, who's from the Indiana University, who studied these 1,000-year cycles. And he's saying that an economic winter is coming. He's talking about a recession And then it'll move to a depression, and then it'll move to an economic winter.
We can't sustain what we did in 2008. We can't take that hit again.
Well, and that's the problem, George. This time, instead of the banks being bailed out, the banks will be bailed in. That means that your money and my money that's sitting in the banks, and I have very little money sitting in the banks.
Will be frozen?
Will be frozen. You'll get your money, but it's a matter of how long it takes to get your money. And that's why Washington, D.C., I'm reading a headline right here.
Oh, boy.
It says, let me read you the exact headline. It's buried under this pile of
All right. I know you. I could see you now with your notes everywhere, right?
Yeah, my study's always a mess. It says, Washington is readying these new capital controls, and it comes up with a list of these capital controls of how they will have no choice but to control the flow of money because, George, you know as well as I do, if everybody went to the bank at one time to get their money out,
they couldn't do it.
$14 trillion in the bank.
They could do it.
There's not 14 trillion.
Look, I've been to the bank where I've wanted to get $1,000 out or something, and they've said, and this is, I'm not kidding, can you come back tomorrow?
That's right. And, George, you remember 2 years ago when I released the book, Don't Bank on It, we cited examples of that. And you remember at the end of the program, George, I challenged your listeners. I said, go to the bank and try and cash a check for $5,000 or $6,000 if you have that much money.
They won't do it.
No, they'll send you to 2 or 3 banks. They don't have the cash.
Or you have to call ahead so they can arrange it, and you'll come back the next day. They'll give you the money, but they'll call ahead to wherever they get their cash, and they'll set it up for you to come back on Wednesday instead of Tuesday or something like that.
No, that's exactly right. And look, some of these things are going to be outside of Donald Trump's control. And I know Coast listeners are going to probably think I've lost my mind, but some of this is good, George. You've
lost your mind.
No, George, we need to squeeze the excesses out of this system again.
Let me ask you this. The person at home is listening right now who cares about paying his or her mortgage or rent, car payment or two, supporting their family if they're married or if they have a family and their kids. That's their big issue. They want a job. Are they going to be able to do those things?
Oh, gosh, George, you always do this to me. Yes, they will if we keep our heads during a time when everybody around us is losing theirs, to quote Rudyard Kipling. Yes, because I believe in this in the people, George, and I believe as we went into the half-hour break, I was talking about the book Tribe, where people pull together in tough times. People forget after the Blitz or after the bombing of London, even after the war, people would go down to the bomb shelters and visit each other because they missed the camaraderie. And so, yes, they're going to be able to do it, but there's going to be some difficult times ahead. That's why I laid out this crisis timeline, so that people could see that there's a repeating pattern and we can't get away from it. I mean, just going from, let's forget 1929, let's start at 79. America was taken hostage. Remember, it was the birth of the program Nightline. You know,
it ruined Jimmy Carter's presidency.
Absolutely, the failed rescue mission. Okay, you had Iran take hostages. You had Russia invade Afghanistan. You had the price of oil go crazy. 1989, we had the savings and loan crisis where 1,100 savings and loans just disappeared. 1999, we had the dot-com bubble and we faced Y2K. The year 2008, 2009, we had the mortgage meltdown. What does 2018 and 2019 look like? I can't tell you. But if you read the timeline, and by the way, you can get the crisis timeline on my website. It's SwissAmerica.com. They put a special banner right across the top. You'll see it's in red. It says Crisis Timeline Coast to Coast. And you can click on it and get a copy of it. It's called Crisis Timeline. And you can see for yourself that these things happen. And the best thing to do is to be prepared for it. Not be in over your head. Don't spend money that you don't have. That doesn't mean not to take that vacation or, hole up in a hole and, and wait for the worst to come. But don't be over leveraged this time. I mean, how many McMansions did we see go by the wayside, George?
Many.
I mean, how many boats were repossessed?
And cars.
Yeah, and big fancy cars. We need to learn to live within our means.
Now, speaking of cars, the automobile industry is slowing down. Now, maybe it's a doldrums, but I always thought summertime was supposed to be good for car sales. It's not this time. What's going on there?
You're absolutely right. And traditionally, the summer is because they're getting rid of their this year's models, and getting ready for the new models to come out in September and October, and so they have discounted prices. And boy, I'm glad you brought that up, George. Car sales are off dramatically this season, and so things are slowing down. Again, does this mean a crash? No, it doesn't mean a crash. It means that we're going to go through some difficult times again. And look, George, I don't believe we've ever been out of the recession. I mean, we have not had a 10-year Treasury note yielding more than 2.5% in 9 years, George. This is crazy. I mean, we haven't had growth above 2.5% in almost 10 years. So something has to give. And people who are prepared, see, this is why I'm so excited about the future, yet I'm a little bit concerned for the short term. People who are prepared for a crisis do rather well in a crisis. Look at Harry Helmsley.
People who are prepared. You're right.
Well, look at Harry Helmsley, Leola Helmsley, the Queen of Mean, okay? Harry Helmsley bought most of his big hotels in downtown New York during the Great Depression for pennies on a dollar. Okay, if you look at every major crisis, you will see people that made fortunes.
I saw a stock, I'm not going to mention the name, but when 2008 hit, this stock went down to $1.41 a share. I thought, well, you know what? You like the company. Why don't you just buy it? And I didn't. It's back to 80.
Yeah. See,
80.
It all depends upon the fundamentals of the company. I mean, if you have a company that's turning out a good product, people always say, what stock should I buy? And I say, what toothpaste do you use? What gasoline do you fill your car with? What type of automobile do you buy? I mean, nobody's going to be a better judge of it's like myself. George, I could kick myself 1,000,000 times over for not buying Apple stock when it was.
Oh, I know, or when it first came out.
Yeah, because I have my wife and I and all my
or Amazon stock. How about that?
Yeah, I mean, it's stuff I use. I mean, I have an iPad. I have a computer. I have an iPhone. Same with my wife. Same with my daughters. Okay, they're using Amazon all the time. Why in the world didn't I see what was right in front of my nose?
Are things cyclical? I mean, will they always go up and go down and back up again? So if this happens, is it going to go back up?
Well, it depends upon the area. Like, for example, the whip and buggy makers at the turn of the 20th century. They went up and down and then went down because we had the automobile. So it all depends. And that in this technological age that we that we live in and work in, George, think about what today is red hot, tomorrow is antiquated. I mean, I remember playing the game Tetris and thinking it was a big deal. Tetris is nothing anymore.
Well, the North Korea thing could affect all of this, couldn't it?
Absolutely. And, I'm glad that you brought that back up because there's a component of that. And I know that you've talked about this extensively with experts on your program. What does concern me about North Korea is not their ability to strike our mainland or even the Hawaiian Islands. My big concern is that they could get a missile high enough in the atmosphere and explode it, and you know what will happen, George. An EMP can be set off and bring down our power grid and could set us back dozens of years. I mean, people say hundreds of years. I'm not sure that that's the truth. We'd have to build new capacity and so on and so forth, but it could bring us down for 5 or 10 years, and they wouldn't even have to hit the mainland for that to occur, would they?
No, not at all.
And so these are reasons why I tell people, look, don't be panicked, be prepared. Make sure that you're living within your means. Make sure that your portfolio is diversified. Have good solid stocks, good bonds, some cash, some gold, some real estate. Be well diversified so that when it comes, you don't panic. Because if you look at any of the crises that we've been through in the past, like I outlined on the crisis timeline, people that didn't panic were fine, George. It was the people that panicked that lost everything. I was speaking to a person the other day who in 2008 watched the stock market go from 14,600 to 6,600. It's an elderly woman. I shouldn't say she's elderly, but she's an older woman. And she's now in her 90s. She did not panic because she didn't look at it day to day. Well, guess what? It went down to 6,600, George, and now it's all the way back to 22,000.
Jeez.
Now, she had gold in her portfolio also, so she wasn't concerned because she knew she could depend on her gold.
Mm-hmm.
She had a piece of property, and she knew that she could depend on her property. She had some cash in the bank, so she knew she... So the point is she was well diversified, and she didn't panic, and instead of like the other people that bought in at 14,000 and sold out at 6,600, she held on at 6,600 and now is at 22,000.
Back to North Korea for a second. I think one of three things will happen. Either a coup from within, either he will come around and decide, you know what, I better play ball with America, or three, massive military involvement by us. I do not believe the fourth possibility, and that is nothing happens. We just stay status quo. That's not going to happen. One of the first three will happen.
No, you're right. There is going to be action this time. This is not going to just come and go this time. And like I said on Fox this morning, I got the last word in today, thank goodness, and that was that I hope we can come up with something like the Stuxnet virus. Remember when the Stuxnet virus, it's hard to say, took out the ability of North Korea to spin their centrifuges for a period of time? Maybe we can come up with a computer program or a worm of some type that can infiltrate their systems to be able to incapacitate them.
Well, and maybe we've already done that, and they're just not saying anything, and nor are we.
And that could be, but keep this in mind. It's very difficult to deal with a madman. Kim Jong-un's father was Kim Jong-il. Kim Jong-il allowed 1 million of his people to starve to death in his mad quest to get nuclear weapons.
While he lived like a king.
Absolute royalty, George. And it's the same thing with Kim Jong-un. And you can never predict the next move of a madman, because a madman, I mean, it's kind of like a suicide bomber. How do you predict what it's suicide? If he's willing to die in the process of killing others, it's rather difficult.
Well, see, I don't think Kim wants to die, Craig. That's what's so bizarre in this equation. He just wants power and wealth, and he wants to have a good time. We'll be back in a moment. We'll take phone calls with Craig Smith.